Good evening, nice to have you with us. When I first heard about these things called ETFs, I thought that they had forgotten the word off in there, because then it would have been a way to tell a funny little thing from outer space to go home. And that is one of the reasons why I invited Mike Brown from ETF SA to come into the studio and explain to us what they are. Evening, Mike, nice to have you.
Yeah, great to be here. Thanks, Jeremy.
Now, an ETF, an exchange traded fund.
It's a portfolio of shares, okay,
Right.
that trades on a stock exchange. So that's why it's called exchange traded. And a fund is a portfolio of shares. So what you do is you buy a share on the stock exchange, one share, one security, but it gives you ownership of a portfolio of shares. So an ETF, let's say you get an ETF on the top 40 index. Your one security you buy, a Satrix 40 or a BIPS 40 or Stanlib 40, will buy you all 40 companies that are in the top 40 index. In other words, the top 40 blue chip shares in the JSE. So one security buys you a whole portfolio of the best shares on the JSE, because the top 40 index is the best companies. It's the biggest companies, the companies that trade the most. So it's a great bargain. You buy one security and you get a whole box of chocolates with a selection of 40 shares, and you're getting the best shares in the market. So it's a very easy way for the first time investor to say, I want to have exposure to equities. So I want to go and buy an ETF that gives me exposure to, say, the top 40 index, or you can buy an industrial index or a financial index, or you can buy other assets. You can buy property ETFs, you can buy ETFs that invest in bonds, you can buy ETFs that invest in foreign markets. So what an ETF is, it's just an easy way of getting exposure to an underlying portfolio of securities, of shares.
So if I'm a first-time equities investor, would you suggest that the first things I would start trading in would be ETFs?
Yeah, because you want to have exposure to equities. You've read the stories saying that shares give you 20% per annum return over long periods of time, 10, 15, 20 years, whatever. How do I get exposure to that? I've either got to go out and select which companies of the 500, 600 companies in the JSE are going to be the ones to select. I don't have the expertise. Or I've got to go to a stockbroker or something like that. And stockbrokers, you know, they're fat cats, unless you bring them R1 million, they won't look at you. How do you get into the market? First-time investor for small amounts. Now, ETFs, on ETF SA, we'll take an investment from R1,000 lump sum, or we do a debit order. If you want to put money away every month, we'll take a debit order from R300 a month. So a small guy can get exposure to the equity market. The risk is low because you're buying a portfolio of the best companies, and by diversifying into a whole series of companies, you're reducing your risk, and you reduce volatility and all those other aspects as well. But you're also buying a top-quality portfolio, and you're buying it with a small amount of money. So yes, if you're a first-time investor, look at ETFs. Once you get more expertise, you can start looking at more sophisticated instruments on the market.
Okay, let's start looking, and by the way, thank you for making it so simple, because now I understand what these things actually are. Right. And hopefully so do you, and we're getting somewhere with this. Now, let's start breaking it down and looking at what you have available.
Yeah.
You mentioned, and there were a few things that I suddenly, they clicked, and I thought, okay, I've heard of that. You mentioned Satrix 40, which is the top 40 companies on the JSE.
Yes, yes.
You said you can also buy into industrials, and that's, I think, it's the Satrix Indie, and there's a Satrix Fini. Let's start breaking them down. What have you got available?
Well, on our platform, we have all the ETFs, and there's about 30 of them at the moment. So there's quite a wide selection. But you can break them down into certain components, either by companies. Satrix is a company that issues ETFs, as does ABSA Capital, as does BIPS, which is Rand Merchant Bank, as does Investec. So there's 5 or 6 companies that issue ETFs. Now, if you buy Satrix products...
Okay, wait, hang on. Whoa. Let's stop right there then. How do I know which one to go with? Because why should I go with Satrix over RMB, over ETF SA? What are you guys offering that's different?
Well, what we do is you go on the website, we'll have a profile on each product. This is what the product is, this is what its performance has been last, as long as the performance goes back. If it's been going for 5 years, we'll give you a 5-year performance. But we'll also give you a product profile. What's in this portfolio? What are the 40 shares or the 10 shares or something in the portfolio? How does it perform? Who is the person writing this, issuing it? Et cetera, et cetera. So all the information is on the website, etfsa.coza. It's a one-stop shop for people who want to buy ETFs. Now, to answer your question, yes, you say, listen, I want to have exposure to the market. I buy a top 40 index. I either buy Satrix, which is well known, or I might look at buying one of the others. BIPS is or Rand Merchant Bank. Why would I buy BIPS? It's much cheaper. The cost structure is much lower than Satrix. And that's on the website as well. It says
Why?
Well, because they run it differently, and they're obviously wanting to get in the market, so they operate a low. ETFs are very low cost, by the way. All ETFs, the biggest selling point for an ETF is you're buying an index. You're not buying the expertise of somebody who tries to outperform the market. You know, he's an expensive guy who has nice suits and drives Ferraris and so on. You're just buying an index. The index just gets picked by the JSE. The JSE says these are the top 40 shares. They change the index occasionally. An ETF just tracks that index. So it doesn't do any choice of shares. It just says if the top 40 shares on the market are advertised by the JSE are these top 40 shares, that's all we'll buy. We'll exactly replicate that index. As that index goes up and down, so does the price of the ETF. So you're buying a simple product. Now you can buy a top 40 index, as I said, or you can say I want to be in a sector of the market. So I can buy an industrial sector, I can buy a financial sector, there's resource ETFs. Let's say I want to buy a product that can perhaps outperform the index. I then buy what's called a value ETF, which is something like the divvy. The divvy is where you go and select shares that will pay the best dividends. The JSE says these are the companies, according to all the research, that are going to pay the best dividends over the year ahead. Why would I buy that portfolio? Because companies that pay high dividends the share price gets pushed up. If you're a successful company paying good returns to investors, the price of your share will go up. So the Satrix divvy will outperform probably a normal market index, as will the RAFI funds. RAFI is where...
What's a RAFI?
A RAFI selects companies on accounting fundamentals. It says over the last 5 years, put all the companies' financials from their financial accounts into a black box, look at certain ratios, and just this pops out which companies have the best fundamental, what they call underlying fundamental accounting value. It's a value fund. And you can do that in an index as well. So a RAFI fund would be a more sophisticated product for somebody who wants to now outperform the market. Or you could buy another part of the market by buying an ETF which just invests in government bonds. So by going to the website, you would say, what do I want to do? I just want to have a basic investment of a couple $100 a month in the market, or do I want to now start running my own portfolio? So I want to be in bonds, I want to be in property, I want to be in equities, I want to maybe have some exposure offshore. You can buy an ETF which gives you exposure to international markets. So it's a very simple way without you having to do a lot of homework, other than just going to the website or going to a financial advisor, because financial advisors use our website and we'll register them as well, to do something that's quite simple. Now, you say it might be complicated, but let's look at the unit trust industry. There's 690 unit trusts. Which unit trust do I pick? The ETFs are much simpler. The ETFs just focus on certain sectors of the market. There may be one or two different people writing ETFs in the same sectors, but not a lot. So your selection is much easier on an ETF.
Okay, now let's go back to the starting point. Yeah. I have got $100 in my back pocket that I want to expose to the equities market. Are you saying I first need to look through the various providers of ETFs and then find firstly who I'm going to go with? Is that point one?
That's one way to do it. Or you can just say, listen, I want exposure to a top 40 index. If you go on our website, we'll say these are the companies that give you top 40.
No, but I'm saying there are a whole lot of companies offering ETFs. So I've got to first find my partner in this.
Yeah. It's like if you want to go shopping, you can go to Pick and Pay or ShopRite or whatever it is. We've got different guys offering ETFs.
So I decide I'm going with the Pick and Pay of ETFs. And that happens to be ETF SA. So I choose your company. I then hand over my 100 Rand and I say to you, I want it in, let's say, the top 40 ETF. How do I move on from there and start determining where I want to be invested in? Because you see, I don't have that expertise. I don't know that I should rather be putting it into a property ETF because property is going to go, or an industrial ETF.
Well, listen, that's always an issue. All we do is we provide a website to say anybody who's got an ETF, come to us. If you go and buy an ETF through a stockbroker, you normally need a big amount of money and you've got to pay quite high fees. We say our fees are very low and we'll take very small amounts of money. But you've still got to select. We're not actually signing on as your financial advisor because that's quite expensive because you only got to pay me commissions. I mean, if you come on the site, we're just charging you transaction costs. You've got to go and select which ones you want to do. But you can pick a very simple portfolio. You can say, and most people are quite well informed. Surprisingly, people
speak for yourself.
No, but you can make selection. Which motor car am I going to buy, and which restaurant am I going to go to? You're smart enough to read up the newspapers and listen to your show to start saying, well, I want to be exposed to equity market. I start buying a top 40 index. As I get to understand a bit, and we send you client newsletters and publications and data and all the rest, and we run seminars, so people, we always fill the room up if we have a seminar. You start saying, listen, I want to now spread my risk, I want to spread my investments, so now I want to buy an ETF which gives me exposure to a different type of asset, bonds or property or different types of sectors of the market. And over time, you'll build up that expertise. Also, you know that risk is something you've got to manage. So you might say, well, listen, I just want to have a balanced portfolio. So I'll put some money in property, some money in equity, some money in bonds. And I can put 300 Rand a month in each of those. So for 1,000 Rand a month, I can be in 3 completely different portfolios. Gives me exposure to an underlying portfolio of something like 80 shares, because each of those has got 30 or 40 shares underlying that ETF.
Okay.
I've got a wide exposure to all the best companies in the stock market, and I'm doing it for 1,000 Rand a month. Now, people will go and do a little bit of homework to do that. They'll listen to shows like yours, they'll go into our website, they'll look it up a bit, they'll start reading about ETFs in newspapers and so on and so forth. And we find we've got a call center which answers questions and so on. But the call center says to me, most of the questions we just answer a technical question. Guy says, listen, how do I fill in my debit order form or something like that? Most people have a reasonable idea what they want to be in. If they have no idea at all, then we say go to a financial advisor, who's somebody who will then look at your entire investment portfolio and give you some advice.
Okay. I want to come back to this because my gut feel is that there are a lot of people out there who are very interested in being involved in this particular form of investment, but are now starting to say, that's fine, I understand what you're saying, where you're coming from, but how do I build my own portfolio? And what sort of, it's something that we've discussed on the show before, over and over again. What percentage, I think the first show we ever did was a show on the property, equity, and cash, and where you should be in that mix now. And I think what we need to do is we need to apply that to ETFs, how you need to build your pillars of strengths within an ETF. So I want to get back to that in a moment. I think we're getting there, guys. I think we're getting there, but there are a lot more questions to throw at Mr. Brown. We'll do that right after this.